If you put Brainard's comments together with what we recently heard from Gary Friedman, the CEO of RH, for the former Restoration Harbor, you might want to think about trimming something from all of your holdings. And that's what we've been doing for my charitable trust. I don't want to be two-faced. It's quite frustrating when you hear a good story and it goes down anyway, but that's what happens when you know the Federal Reserve is on a mission to chill the economy. Good stories go down. Yes, chill it, maybe freeze it. Why be so attentive to this one Fed official? Because I chose to ignore comments made by a person by the name of Esther George, another Fed head, in early October of 2018. That was a mistake. George's comments predicated Jay Powell's later statement that we needed lockstep rate hikes. Ultimately, we didn't get them. But for a few months, trillions of dollars were lost in the industrials and tech stocks. The month of October of 2018 was the worst month in years and years and years. And it really fell on the semiconductors, and it fell on tech in general. Okay, this time is different. Brainard's not a hog. She's a dove who's recognized we've got the kind of persistent inflation that's most damaging for regular people. She's right. Exactly the people she took this job to help. Their wages aren't going up as fast as inflation. I won't allow myself to be oblivious to this wake-up call the second time. Again, as I told members of the investing club, I'm pulling in my horns and selling with alacrity. Listen, a year ago, Brainard thought inflation was transitory and headed lower. Problem now is that we're beginning to see some real cracks in the economy. Mortgage applications going down and down and down, which could be deadly for the economy if this pace continues. Auto sales coming in much weaker than expected. Holy cow. Baltic freight rates, a great indicator of industrial demand, going down day after day. Meanwhile, there's a sense that European business is way off kilter precisely when China seems to be undergoing something close to a national COVID lockdown because their government refuses to use our superior vaccines. Now, I want people to mind my words. This is not a sell everything call. I've been through that. I've been through 40 years. I'm not saying that at all. In fact, the healthcare stocks and the oils are still very attractive here. I would put more money in them if they come down. Oil because of supply issues, drugs because they're pretty much immune to the Fed-mandated recession. I'm simply saying that I'm getting more conservative. I don't like it when you have a market where on Monday traders buy all the semis and dump the healthcares, and then on Tuesday they buy all the healthcares and dump the semis. That is a classic sign that no one knows what to do. It's the kind of thing that usually happens right before the same traders say, I give up. I'm going to sell everything. I don't want you to get caught in that maelstrom. Bottom line, if you own anything you don't like, this is as good as damn time as any to sell it. We're up a lot. I think we were going to get good prices in retrospect. When the Fed's biggest dove turns into a bird of prey, you better take notice of it because she will take your head off.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.